Hello everyone and welcome to ICM's midday session. We're having some movement in the market today, but it's calm relative to what we witnessed yesterday. In terms of economic indicators, we had a couple of numbers coming out from the United Kingdom, among them the business investment for the third quarter, which showed an expansion by 9.4%, which is better than expected. And the final reading of the third quarter GDP also showed a growth of 16% during the third quarter, which relative to 15.5 as preliminary reading. Also, this is just a more optimistic number. We had the GfK German consumer climate from for January, which dropped to negative 7.3 from negative 6.8, but better than expectations of negative 8.8. So these were the key numbers in the European session. Now we're waiting for the final reading of the US GDP for the third quarter, and also CB consumer confidence. So let's start with the price action. The euro dollar just had a move lower. So mainly yesterday we were seeing a strong dollar across the board. However, this didn't last, and then we saw a turnaround, especially following the approval of the stimulus. However, this was just a chaotic move yesterday. So in terms of patterns, what happened? You can just draw the trend lines combining the tops and bottoms, so we end up with a channel that we are currently trading at. So we could be trading inside this channel for a while until we have a clear mover for the market to break out of this channel. So among the top, we could be testing 123 or like 2320 in terms of resistance, while support continues to be like key support is almost near the 100 H4 exponential moving average. You can see how close we are to it. We were to it yesterday, which is somewhere between 120, 120 and 120, 130. So this could be a good support. But however, as long as we're above 2180, the market could be poised for further upside. This is for the euro against the United States dollar. Moving to the British pound against the US dollar. So we saw yesterday a huge rally, especially following the announcement of Boris Johnson that he's doing some compromise on fisheries. However, it's still not valid. We saw this rally here, and the market was just reversing yesterday's trade and then moved lower. So this is what we were witnessing in the past couple of hours: a rally, correction, another move to the upside, a drop here. And now, following the headlines that Boris Johnson and von der Leyen they spoke in order to reach a deal, also this was a bit optimistic and positive for the market, and we saw the rally towards 134, 134.40. If you just go closer to the 15 minutes chart, we're building some resistance here near almost 34.50. So watch out for a break above this with a good volume. Could lead to a rally, fast rally towards 135 level. For the British pound against the US dollar. And on the smaller picture, we're just trading inside key levels, so you can just set these levels on the smaller picture as a small range, and you can trade just the breakout of this range. The dollar against the Japanese yen, so nothing much. We had this move rally to 103.90, and then the market or the rally faded. You can just draw also a trend line combining these bottoms, or you can just highlight it as a support line here. So this area here, almost near 103.20, could be a possible support zone or support line. So watch out for some buying demand as we drop towards 103.20. However, moving back higher just needs to move above 103.90 in order to continue higher. As long as we're below 103.90, it's very possible that we just put this further drop and pair. So this is just on a closer frame. Nothing much happening on the dollar yen, neither on the dollar Swiss. So following yesterday's rally, also we're seeing now a pullback. So the dollar is weakening again. However, we're just building a base for the dollar against the Swiss franc near 88.20, 88.30. So this is just a key area. While definitely we need to move higher above 89.45 in order to just turn bullish again on the pair, and maybe prices could be retesting the 90 level. The Australian dollar against the US dollar, similar move to the British pound. Market moved lower, rebound, and then correction lower, and currently we're stalling inside a certain range. So what you can do is just highlight the range, just wait for for the sidelines and trade the sidelines. So this is what you can do for with Australian dollar, since it's not clear, the market is just chaotic, especially following the move last night and then the correction. We need to omit this move here in order to see what could happen. So this just puts us in a clear trading range. Similar to the New Zealand dollar against the United States dollar, however, the support here, it's valid, it's almost the 70 level, while here the resistance is just capped near almost 71, 71.05. So this area is just here. Resistance area, we need to break above it for further high. As long as we're below it, we're poised to break the 70 level. However, all these trades, they're just dependent on risk on, risk off sentiment. If we're gonna go again for risk off sentiment, definitely the dollar is gonna strengthen and we're gonna see drops in these pairs, and vice versa. If we go for risk on mood, these pairs will gain the most. The dollar against the Canadian dollar, so similar, but just a reversed formation. The dollar was strengthening, gave up partial gains, and then the dollar is strengthening again. We talked yesterday about falling below 28.40, 28.20 area. This is just building some good support here. Previously was resistance and now it's building as support. So we need to break definitely below it in order to move again lower. As long as we're above it, we could just be poised to retesting the top of 29.50. So this is just the range that's being built for now. Gold price is soft on the day, nothing much. So yesterday following the sharp drop, we had sideways move, and now also we're just trading sideways. The past couple of hours sideways down following this sharp drop. So what you can do is just highlight yesterday's intraday resistance of 1884. This level was also a clear level previously when the market was trading sideways here. So watch out for a break above it, could just turn bullish again, and we could be targeting 1896 and 1906 again. And as long as we're below, just the coming area of 1855 is just key area. So dropping below 1855 would just add to the losses, and maybe we could be retesting 1820. So these are the key levels if you are trading gold. Moving to silver, so similar formation. We had a reverse, a drop, correction, another drop, and now we're having a correction. So as I said yesterday, on the bigger picture for silver, we're just trading in a bigger range, and we're just waiting for a clear move and for trading activity to cut back to normal following yesterday's shake. So these are the levels. We're just in the middle, almost the middle of the range, slightly less, but still it's not very indicative for what could happen with silver. So definitely what you can do just to draw this the sidelines or the support and resistance, and just wait for any clearer market movement. Oil prices, we were trading almost slightly near these support zones, so you can just draw this trend line here, and we were just closer. Either you can tilt it a bit, so it's almost the same formation, just plus or minus. So this line is holding. Any break below it, just on maybe some bad news for risk appetite, could just drive prices lower again towards 45 and 44 per barrel. While as long as this trend line holds and we were able to move back above 47.80, 48, this could just trigger further gains, and we could rally towards 49.50. This is for oil. Moving to the Dow Jones. So following the sharp decline yesterday on Dow Jones, we finally saw a bit of the market was able to brush all the losses and then move higher again, and now we're back to sideways trading. Well, what's a bit clear about what we had yesterday, you can just draw this and then draw a parallel line to the top. You can just see how the market just finds good levels by using classical technical analysis. You can just find the good levels where the market was rebounding. Also this one here, if you just draw this to the upside, so where the market first corrected, we also have a similar formation. So you can see how by just drawing a certain straight line and then go for a parallel line for it, just by using also tops and bottoms, you can set a certain possibility for certain price patterns or formations to be formed. So on the intraday, definitely staying above 30,000 is just bullish for Dow Jones. On the top, it's being capped by the rallies to the upside, 30,358. So we're inside the tighter range. Breaking below 30,000 could just add the chances of falling again towards 29,700 and 29,400. And moving higher could just open the way for further gains towards 30,500 for the Dow Jones. This is all for today's session. I'd just like to remind you that all the information, news, analysis, and opinions mentioned in this session, they're only for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument. We wish you safe trade.